You asked, we answered. Welcome to our latest ETV video mailbag, where our analysts sit down to answer questions submitted by viewers like you. If you have a question for one of our analysts, visit the link below to submit it, and we'll do our very best to get to it in the next episode. Enjoy. Our first question today comes from Avik from India, who asks, can the fifth wave of wave 1, 3, or 5 contain ending diagonals at 2 degrees? In other words, can you have a smaller degree ending diagonal fifth within a larger degree ending diagonal fifth?
That's a great question. And the answer is very simple. No, you cannot. In an ending diagonal, each of the waves at the next lower degree must be zigzags or multiple zigzag structures. So if you have a fifth wave ending diagonal, the fifth wave within that diagonal must be a zigzag or multiple zigzag structure. It cannot be an ending diagonal, which is a motive wave and technically a five-wave structure.
The next question is from Lindsay from Canada. Can various indices of the same country, like the NASDAQ and S&P, for example, have different wave counts?
Interesting question. At the lower degrees, yes, if you're looking at hourlies, you'll see differences. They don't have to move exactly in tandem, but at the higher degrees, you'll probably notice that they're pretty much the same. It's just at those lower degrees you do get variances when you have these types of indexes in the same marketplace.
Stan from Russia would like to know, can wave 4 visit the territory of wave 1 only by bar tail, i.e. price not remains in wave 1 territory for long, or the 5-wave structure will be cancelled as soon as the price touches the peak of wave 1?
Well, there's this question, there's a lot of misunderstanding about the fourth waves of impulse waves. So maybe I can just clarify this once and for all. In an impulse wave, wave 4 cannot end in the price territory of wave 1. That's the rule. But wave 4, before it reaches its termination point, it could enter the territory of wave 1, although as a guideline we would want to see that, but it just cannot end in the price territory of wave 1. So in answer to your original question, yeah, you could see wave 4 enter, it just should not end in the price territory of wave 1.
Our next question is from Phil from the UK, who asks, what are the best entry points when looking at a 5-wave impulse pattern to the upside, and how do you know when wave 2 and 4 are complete?
Well, that's, a good answer would be quite long, and we don't have several hours. But let me say first that the best waves to trade for or position for are usually third waves, fifth waves of impulse waves, and C waves of flats and zigzags. Unless you see an ending diagonal, that's also a great setup. But in terms of trying to know when that second wave ends or when that fourth wave ends, that requires a lot of analysis. There's no real brief answer to that. You have to use all of your guidelines, including channeling, counting the wave structure, looking for Fibonacci price clusters, and put all of these items together. Now, I will say, though, briefly, if waves 2 or 4, if there's zigzags or multiple zigzag structures, you should be able to channel those. And if you break that channel, that's certainly strong evidence that those structures have ended. But if you're looking at flats, it's a bit more difficult. You have to really count the wave structure. In a triangle, it's a lot easier. You look for wave E, and then you look for a break of the BD trend line in the triangle. So a lot depends on the pattern, and I'm simplifying this, but those are some of the highlights of what to look for when you're trying to determine the end of waves 2 and 4.
Our last question is from Rana from the USA. Markets don't follow the news, politics, or events like elections or the New Year, but the best Elliott wave moves in markets happen on such events. Do you agree?
No, not really, not necessarily. I think when news comes out, significant news, you'll get a knee-jerk reaction, and often it'll be in the opposite direction of what the Elliott wave analysis is telling you in terms of the opposite direction of the main trend. So I don't think news is very helpful, except maybe as a contrary indicator. You'll get a reaction maybe going contrary to the main trend. I think the classic case is at the end of a triangle. Often you'll get news whose tone and character is actually opposite of what the Elliott wave analysis is telling you at the end of that triangle. So it depends how you're going to use that news, but generally speaking, it just causes a lot of volatility and usually not that useful.